Hey guys, Doug the Retirement Guy here. We have our weekly review of the Yieldmax ETFs, all 9 of them. We give you all the data. Plus, we've added some new information out there I think you guys are going to be really excited about. The one big thing that we're doing is the return of capital is added to each and every one of the reports so you guys can see what's happening this week. So before we get into this, I got to throw a shout out to all of our Patreon supporters. You guys are phenomenal. You keep this channel rolling with your support. We add a lot of information out there, and we're going to show you something that we've just started adding on a weekly basis so all of you can stay up to date. The other one we want to thank is all the new subscribers. You guys are taking us to record highs, and we appreciate that. And of course, all our past subscribers, thank you very much. So let's get into the Yieldmax weekly dividend ETF review and see how well they've done in this past week. First, we have to go to a notice to all viewers. Past performance does not guarantee future results. The information provided in this video is for educational and informational purposes only. It should not be considered financial or investment advice. These examples and suggestions discussed are illustrative and may not be suitable for your individual situations. Always consult a licensed financial advisor or professional before making any financial decisions. Let's take a look at the weekly ETF, the growth of the funds this time. And unfortunately, we see everything is virtually in red. We had a bad week this past week. The whole stock market as a whole has just not been doing well. And especially a lot of these markets, we're seeing some downturns right now. And I don't know where we're sitting. So things are kind of been interesting here. But we take a look across the board, and the number one down is ULTY. I know everyone's out there probably holds this. They watch the channel for it, but this thing is down 6% this last week, 10% down for 30 days, and it's down 36% for the year. We are now into the $5 range. This is huge from where we were just a few weeks ago, but now down to $5.73. The other one to look at is the AI, and we know AI is starting to get hit. People are starting to freeze up on AI. Are we making investments? Are we not making investments? Where are we going with it? And this one's down 5.21%, 6.97 for the 30-day, and down 11.20 year to date. So we've taken some huge cuts across the board. Even the crypto. A couple of things I was reading about crypto that they're starting to say, hey, this may not be all that it's cracked up to be. We got to watch what's going on here. The LFGY, which has always been a great runner for us, especially in the dividend market, is down 4.78%, down 14% year to date, and down 32% for the year. The only one that's still positive is going to be the semiconductor. The CHPY is up 11.74, but that's still down over 8% year to date. So it took a huge drop off there. So realistically, the only other one to talk about with this bottom line is the YMAG and the YMAX, both again down equally, about 2.41 and 2.66 respectively. So everyone's pretty much down on the growth side. So when we take a look at the dividends, which is what everyone's always wanting to know, let's take a look at the dividends for this week. And it's very interesting. We're down and up, probably about a 50-50 mix. So I know everyone's going to jump right to it, but basically our winner for the week is LFGY. The crypto is still paying out 41 cents of a new dividend. It is down from the 44 from last week. But then we go down to ULTY, which is the one everyone's, of course, going to jump to, is held its own at 10 cents. I mean, it's down because last week it was 0.1006 and now it's 0.1000. So pretty balanced there. We go down the entire chart. We look at YMAX is down about 2 cents. YMAX is up 5 cents. So very strong dividend come back in from them. We look at the Russell 2000 RDTY is up to 39 cents. QDTY has pretty much held its own. at 19.12, and then GPTY at 37.7. So overall, not bad. But we look at the return of capital, the ROC, and you start looking at this, and you see that 6 of the funds are all at 100% this week. So what does that mean, and where does that come from? Well, basically, that means they're going to probably use some of their NAV to maintain the dividend rate that they had, and did not get as much income as they originally projected. The other one is that they're using the tax advantages to still produce some high dividends. Because you got to remember, a lot of these funds, if they don't generate these big dividends, you guys are out, you leave them, they lose the money, and move on to the next thing. YMEG down 7.73, so that's a very, very solid 14 cents that everyone's getting as income, and YMAX 72.37. So it's kind of important to watch this return of capital. If we continuously see this, then we know we're going to have a continuously issue. But at the same time, we always got to remember these are tax advantages that we get to use. And then finally, if we look at the distribution rate, and this distribution rate, now one thing I do want to clarify, because I don't know if everyone understands, this distribution rate is what the actual running distribution is of the fund. So if your fund has not been out there for more than 12 months, this is the ongoing distribution. This is not a 12-week or 12-month buildup. This is actually where it's at over since it's time that it started. So we see ULTY is at 90% already. The next one that we look at there is going to be YMAX at 65%. As we've always said, those are big cash cows. They're going to pay out equally. And then you get into the 61% from LFGY. So FGOY is definitely winner at 41 cents across the board on the highest dividend paying. ULTY has the highest percentage payout for so far for the year. So very, very strong numbers on that side. So we lost a lot in the growth. We've kind of maintained in the dividend market. So overall, kind of rough waters, lose one, gain one. Depends on what you're looking for from your portfolio. If you're looking for income, the income's still coming into you. If you're looking for growth and income, you're not going to get that. It's hard to get to in the dividend, in the Yieldmax dividends, because they're built for income. So let's take a look now at the basically what we call is the dividend payout. And this is going to basically give you the percentage of how much of the dividend is of the price of the shares. And why we do this is we take a serious look at, when is the dividend too high to the current price? When are we going to see, this will kind of tell us when we're going to probably see a cut in the dividend. When you look at ULTY paying 10 cents and their fund is now down to 573, that's 1.76% of the share price is going out each week as a dividend. So what we have to look at this and say, will they cut the rate? Will they cut it to that price? Will we take a look at the loss of assets under management? Are we going to see a cut into the capital? And these are the things that are warning signs that we put out there. So realistically, the only one I'm really concerned at is ULTY at that 1.76, the YMEG at 1.05, and LFGY at 1.27. They've been at that rate pretty much for the past few weeks. Slowly, some of these are just slowly creeping up. This can change if the price goes up over this next 5 days. We'll see a change in these numbers, but that's the question we have. When is the dividend too high for that current price? And I know that the dividend doesn't drive the price, but dividend cuts can easily be done because of the price of the shares. Now, the return on investment. This one is very huge as also. We take a look at the new dividend, we take a look at the current price, and we give you the calculations in weeks and then in years. And when we look down on this, again, ULTY is number one because that price is so low at $5.73. We're down to 56 I'm going to round it up here for you guys, 57 weeks, and you have all your return on investment just from dividends at that 573 price point. So you got basically a year and, man, you're basically a year and a month, and you have all your money back on ULTY. LFGY is at year and a half at 78 weeks. And then we have YMEG at basically year and 3/4 at 95 weeks. Again, the question's been out there, why does this matter? Well, it's if you basically sat down and said, look, if we can continue to get 10 cents per share and pay $5.73 for a share of ULTY, 56 or 57 weeks later, you would have all your dividends, would give you all your funds back, and you still have the price of the shares. So even if the price of the shares, I'll say the magic thing got down to $5, you're still, realistically, you're still money ahead because you got all your funds back, and you have now how many shares you bought at worth $5. The other thing too is if the price of the share goes up or the dividend goes up, that's going to cut into the number of weeks of return. So there's a lot of people out there who will just what I call buy, set, and forget. Is they'll buy, and we'll just use one share again. They'll buy today one share at $5.73 of Yieldmax and sit back and just start calculating every dividend payment coming out. And at the end of that period, so once they call it the break-even point, they look at how much money they actually made off the program from the share valuation, and then plus dividends. So it's a unique way of looking at this and saying, hey, if I want to put some money into this, not worrying about what the long-term stock plan will be, you could easily pick up some good dividends, but it is spectacle because it's coming into is what that dividend's going to do. That dividend drops off, very similar. We'll see the drop off. We have to watch these numbers. So let's take a look at my portfolio that we started back on April 25th. And guys, I'm with you across the board. We got into this. We didn't just jump in at low prices to give you a great running. We just jumped in on April 25th is when we really started watching each and every one of these funds that we invested $1,000 into each fund. So far, our growth right now is $260.30 or 2.89 for actual fund value growth. We are actually down 3% this week. We took a huge hit this week. So the past, and this is why I track this every week, for the past 3 weeks, we have watched the fund slowly lose its growth. I think right now I would realistically put us, we're probably down about 6% from where we were getting into this month of August. So we're not, I'll say not pleased with the drop off of the value of the growth of the fund. We do like the dividends that we've gotten so far, and that is we're at $1,278.85 or a 14.42% dividend income. From that $9,000 investment, we're basically getting $82.65 per week. So pretty standard flow of getting a regular cash flow in and out, about $82.65 per week. So kind of pleased with that so far. So both of them are in the green. You got to be happy with that. But we are watching, truthfully, one more, I'm already calculating one more week, and I'm probably in the red on the fund value for growth. Now let's pull for a positive week that we're going to be able to gain some of this back. But the total fund right now is $1,539.15 or 17.10%, which you can't beat for a $9,000 investment since April. So we're cruising in real close here. We're only 5 days away from being 4 months into the program, and we've been able to collect 17%. So I'm pleased with the income that we're getting from this. Now, we take a look at let's break this down a little bit. We take a look at the stock value. Anything below 1,000 is killing us. So LFGY is a fund that's dramatically down. ULTY is down, YMEG's down, YMAX is down. So if we're looking for something, and I always go through this, if we go something for growth only, okay, these are the funds you don't want to be a part of. The only fund you really want to be to is the GPTY, because that thing's given us 1,100, basically $131 worth of growth, which is over half of our growth comes from one fund. The next closest one's going to be the QDTY. Okay. Now we look at the dividends, though. When we take a look at dividends, the number one polar is ULTY at $268. And then we have a lot of people coming in. I call it that 150 mark, LFGY, YMAG, and YMAX. So the question is, even though they gave you these big dividends, and maybe we need to show the calculation on this, if they've given us these big dividends, but we've taken away in stock value, are we money ahead or are we not money ahead? So if it wasn't for having GPTY in the fund and the QDTY in the fund, we would be showing that we're down in growth of the value and increasing in the dividend side. So as a whole, to me, the best performer that we have is GTPY. And it's funny, our second one would be CHPY, and our third basically is going to come into is ULTY when you look at total numbers. So across the board, guys, you have to have like this. The solution or the summary to all this is what I'm saying is you have to have a more balanced fund when you're dealing with these type of income generating funds. So you need something that's going to help you cover on your growth side of it. You're going to need something that's going to give you the big dividends and something that's going to kind of wash the two together. So every week, guys, if you don't know, we supply this to all of our Patreon supporters. We give this information out. You get it normally by 7:30 every morning, or every morning on Wednesday for Yieldmax. We do this also with, I think we're doing it with Granite shares, and we also do some with the Round Hill as well. So you can get this information ahead of time. We show it here that you guys can see what you can get by joining the Patreon group. And it's great information. It's a lot of information out there, and it just runs on a regular basis. Doug's top 5 picks. We put this one on hold, guys. We are not going to sit here and give you any kind of a picks. We're not going to give you any kind of suggestions because we're in a situation right now where we're spinning just as well as you are. We're trying to figure out where this market's heading, what's going to happen, where we're going to go to next. Is it going to continue to fall? If it does, we're not afraid of it. We're going to continue reporting that to you. But we're not going to make any suggestions for to get into this week. Just sit tight, hold tight, and just collect the dividends and move on. So I would not be the one really doing anything special this week. Guys, it's Doug, the retirement guy. I hope you like this information that we got. Give me a thumbs up. If you're not a subscriber, don't know what you're waiting for, hit that subscribe button. Join our unique community. We give you the stuff on simple, basic information and the way my parents always gave it to me. Also, comments. If you guys have any comments, put them down below. I love to hear what you guys have to say and where we're at. And finally, if you can support the channel, get into that description, hit that Patreon tab, and join the family over there. Get that information as I showed you that we give you on Yieldmax or on the Yieldmax products every Wednesday morning to help you guys out. So we'll tell you next week.